Individual names now. Kaynes Technology is the first management on the show, reported a mixed set of first quarter numbers. Margin was a miss despite having a strong revenue growth. Jairam Sampath, the director and CFO at the company, is joining us now. Mr. Sampath, good afternoon. Thank you so much for joining us. Well, it's been a strong growth and you're guiding for a similar growth in FY25 as well. I wanted to know what will the drivers for that growth over an already high base would be. And what about margins? Do you think that could come under pressure, or is that something that you will be able to maintain?
Yeah, thank you. Thank you for having me on the show. Good afternoon to everybody. So fundamentally, the first quarter is a small quarter. It's about 15-16% of the total year. So you don't get the kind of operating leverage that you would get in the other quarters. So there is an actual increase in margins while you go through the year. That's the first thing. The second thing is our business is based on order book. So what it would essentially mean is that already the orders are in place and it's a matter of execution. So in short term, we can pretty much with certainty say how much revenues that can come in. The third thing is, since the order book is with us, we can pretty much compute the kind of margins that are likely to be there, and that's what is reflecting in the guidance that we have provided.
Okay. Mr. Sampath, you've given a target or a guidance of 60% revenue growth as far as FY25 is concerned. Q1, you've seen close to 70% growth. Margin expansion, you've expected, almost 100 basis points. Are you sticking with both of that? While revenues have been higher, margins have actually slipped on a sequential basis too.
Yeah, it was expected. In the first quarter, as you know, this was the election quarter, and we didn't have too much of activity happening in the government procurement sector, which actually drives some of our OEM sales, which are especially in the railways and other large project areas. So we are pretty confident that this is back on track now that the first monsoon session also will be concluded now and budget is also done. So you can look forward to some good, exciting times ahead.
Next thing that the street is watching out for, Mr. Sampath, is the OSAT or the PCB approval. By when does that come in? Because most of the analysts have not factored it in their target prices or their earnings estimates. What is the timeline looking like here? You've not used your QIP proceeds yet as well. So any timeline that you can give a sense of here?
It should be happening anytime. So of course, when I say anytime, this is in the last penultimate stage, when it goes to perhaps a cabinet committee or so. So we're not very privy to the exact processing inside the government, but suffice it to say that it's in a very short time frame, the approval for the OSAT is likely to be there. We have also purchased the land in Gujarat, and we have kept all the other project-related activities, collaborators, team, everything is ready. And so that we understand that there have been a couple of months behind schedule on this particular thing, but I think we probably will catch up, so that we do our revenues in Semicon by, say, FY26 fourth quarter. We start, giving some significant revenues.
Mr. Sampath, please correct us if you're wrong. We understand that, the current order book is standing at slightly over 5,000 crore with an average order inflow per month of close to 480 crore. Can you sustain this particular order inflow growth? And on the back of that, FY25, where do you expect to close, or how do you expect your order book to stand at?
Yeah, so what happens is order books expand faster when large orders come in. And so it's you must see our estimate is that by the end of the year, we'll be at about 5,700 or so. The order book will be about 5,700 crores or so. So some of the big orders, especially in the industrial area, have already come in. So that kind of pushes up and temporarily makes it look as if the monthly order rate has gone too high. But actually, this is at a very steady pace. And this year, based on this order book, of course, one can say for sure that 3,000 crores of sales revenue should be definitely possible. And we'll see probably the second half of the year whether anything better is feasible.
Okay. Mr. Sampath, how much of it will come in from exports? Currently, it's around 15% of your revenues. Are margins higher in export markets? Second question is on the working capital. It has reduced, but do you think it will continue to be above that 100 days mark?
Yeah, so the working capital is also a function of the first quarter is always, it's like a post-lunch session kind of a thing. It comes on the back of a very busy fourth quarter. So obviously all the parameters look a little bad. but it picks up during the year. So I think working capital is in the right direction. We have actually stocked up a little bit. So in absolute terms, inventories have gone up. And since we had a busy quarter, so a little bit of, since first quarter, a couple of customers, some delays, etc. But I think in the receivables front, so we think that this all gets sorted out, and by the end of the year, we have projected about 10 days reduction in our net working capital cycle that we will do. As far as the exports is concerned, in the short term, you don't see much changes because right now the entire business is driven by a very strong tailwind in the domestic sector. But all the new customers that we are onboarding, there is a fair bit of export content. So by the end of the year, you can start seeing some large exports happening. And then also FY26, I think we can expect a little larger share of exports than the current 10-15% kind of number.
Okay, Mr. Sampath, that's all the time we have with you today, but we'll have you once again on the show to discuss when you do get the OS80 approvals. Let's now slip into a short break. The management of City Union Bank joins us next to discuss the Q1 numbers and more. Stay tuned.